Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsarthi, and markets have gone crazy. I really don't understand what the markets are doing. The talk of recession, the Fed is looking to orchestrate a recession. In a recessionary environment, you have the rupee that is falling very sharply, going to all-time lows. The euro has gone down to almost par to the USD. The And in this market, you have the US 10-year Treasury yield falling very sharply from 3.35% to 2.82%. And in the US Treasury yield curve, which is all the maturity treasuries are trading at the same level, which is 2, 5, 10, 30, almost. And in this, in India market today, Sensex Nifty rallied. The Gsec yields fell down from to 7.29% from very high levels. So what do you do in this market? Just before that, the best answer solution to this is download our app, Quick Invest by INR Bonds, where you get the best curated list of bonds to take you through such crazy times of the market and the best bonds available for investments in your portfolio to keep your portfolio balanced, give you steady cash flows, the returns that you require to beat inflation, along with the most important information, risk, etc. It's a seamless in-app investment process. Download the Quick Invest by INR Bonds app now.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.
Now, coming back to what the markets are doing. So, you have a recession. That is, the markets are talking about a recession. So, what is recession? Basically, it's degrowth. And its degrowth means that is, the demand is falling in the economy. Now, this recession can happen because of on its own when inflation is so high that people just cannot afford to buy goods and services. So they stop buying goods and services because they just cannot afford to. And automatically the price comes down and everything else leads down to a growth coming off. Then along with that, with very high inflation, you have central banks that have created the inflation now looking to save their faces by tightening policy to such an extent that recession is going to happen anyways. So two ways: high prices are hurting in consumer demand, and high interest rates are hurting both demand and investment, and lack of funds as well. All this put together a very large recession. So typically in recession, what happens is when demand falls, then obviously the companies that make all goods and services, the demand falls and the share value comes down. Many companies who are heavily into debt will find it difficult to service debt, so credit risk will go up. And typically, when recessionary happens, the government spend. So when government spends, they take up the borrowing, and bond yields also rise very sharply because central banks cannot buy the bonds to add more liquidity. So in all this, equity markets and bonds rally on recession does not make sense at this point of time. So that's why the headline is a little is saying that the markets have gone crazy, and it does look as if the markets have gone crazy. So investors have to be extra careful in such markets on where to invest. And obviously, INR Bonds is there to guide you to its brand, web, which is giving you all the market analytics that you're in, and the app that gives you the curated list of bonds. Thank you very much for listening in, and do not forget to subscribe to our YouTube channel if you've not done so already.